I'm here to tell you that home equity is literally monopoly money. It's unrealized gain, and the news is trying to scare everybody into thinking that we are losing all of this money, we're losing all of this wealth, and I'm here to tell you it's nothing more than monopoly money in reality. Find out what I mean and more next. What's up, guys? Jeremy Kane, eXp Realty here. So excited to come to you today. As always, like, comment, subscribe. Today we're going to talk about equity, and I'm offering anybody who's watching this my annual review, which I do for my clients every single year. But if you are watching this and you're wondering, what's going on with my equity? Am I on the right loan product? All of this stuff, please comment below. We can connect, and I would be happy to do an annual review for you. And it's not just a CMA that all these other real estate agents are throwing on your door. It'll be a in-person annual review. We'll touch on the market value, we'll touch on your equity position, but more so, what can we do with that? And that's really what this whole episode's about. So super excited to dive in, so let's go. All right, guys. So equity is monopoly money. And to talk about this first, we need to talk about what is equity. What do you mean exactly by home equity? Home equity is the market value of your home, the current market value of your home, what we think I could sell it for, minus your loan balance. If you don't have a loan, you have 100% equity, that's still cool. Market value is your equity. Other than that, if you do have a loan balance, it includes your down payment, it includes your principal buy down, and it includes your appreciation from, when you bought it. So that is what equity is. So we're talking about equity, and in that case, and we've seen a ton, the real estate market crash, the home prices are down, all of this stuff. But at the end of the day, at the end of this year, we will still see a year of appreciation. It'll be a lot smaller than last year, especially, and even than we were forecasting at the beginning of this year. Maybe 5 to 10% is kind of where I see the projections landing, but it's still an appreciation. We're not losing value in our home technically. What we are losing is from those outliers from the March and Aprils, those people that were paying, going $100,000 over, no appraisals, all this stuff, those people are kind of the outliers, right? And those people are still okay as long as they don't sell. But we tend to compare, and we got so used to comparing. Our home was $25,000 more than our neighbor sold for yesterday because that's how rapid our market was moving. Now we need to kind of get back to the good old days. If you look at all the numbers from 18 and 19, all of our numbers are falling really similarly, from closed transactions to, close to list price to, percentage to sell. All of those numbers are kind of falling into place. But here we are, now looking at these headlines that are all fear-based and all of this stuff, and they're talking about losing home value, like your home value is going down, it's crashing, it's doing this. But the honest truth is, all you're doing is losing just a little piece of the pie. And if you bought in March and April, maybe you have lost a little bit. If you have a down payment, you're not upside down. If you had down payment assistance and stuff, you might be a little bit upside down, but that's nothing to fear unless you have to sell. If you get in a position where you can't make that mortgage payment, that's when that's a problem. So that's got to be priority number one for those people. That's a very small amount. Most people were rolling over equity from a home that they're upsized or they downsized. Some people paid in cash. 30 to 40% of the homes are owned outright in Denver. So all of those things come into play. But let's focus on this media piece. They're laying fear into you. They're saying, absolutely, the home prices are going down. The real estate market's crashing, all of this stuff, but really you're just losing, right? If your home gained 40% in appreciation, like most homes have over the last 3 years in Denver, you're losing $20,000 or $30,000, but you gained $200,000. And that's where we really have to put it in perspective and realize that it's not cash. It's not like your savings account, unless you spend it, went from, $50,000 to $30,000. Right? It's your home value. And we don't know the market value of your home specifically until we put it on the market. So maybe you were comparing your house to your neighbor's house that had, a ton of upgrades or had 300, 400,000 more square feet. And that was kind of in your mind. So it's a mental thing. So that's why equity is monopoly money. So now we need to shift the focus from the fear to talking about actually making that realized. If you want to make that equity realized, if that's your number one savings account, that's what you're doing. Maybe you're saving it for your kids' college or your retirement, or maybe to buy a second home or an income property. That's where we need to talk. And right now that is really expensive to access, because either you have to refinance, right? And that's going to cost you a higher interest rate right now, especially on the cash out. Or you can do a HELOC, which HELOCs are tied to that Fed rate that we talk about. In fact, when you hear the Fed's raising interest rates 3/4 of a point, people are like, oh, the interest rate's going up 0.75. No, it's not directly correlated. That's short term. That does affect the HELOCs, the home equity line of credits. So understand those are a little bit more adjustable than our 30-year fixed we've grown accustomed to. And that's where we need to really focus, is, accessing that. But it's only if we need it in the immediate future. In those annual reviews, I focus on, okay, big picture, like what are we going to use this equity for? Do we just want to have no mortgage on the property when we're at retirement, so we don't have that mortgage payment? That's great. Do we want to leverage that money? Do we want to maybe buy a couple properties and have other people pay for the cost to get that money out? That's all part of it. And it could make sense for you right now, even in our high interest rates. If you want to buy an investment property, depends on location, it may still make sense. And there's situations where you buy an investment property and the tenant in that investment property pays for the mortgage on that house, and they pay for the extra portion of what it costs you to pull from your equity line. And then you have two houses appreciating, you have two houses that are losing principal reduction, maximizing equity. So that's what those annual reviews are really focused on. And if you're interested, I would love to help you make your equity realized and take it from monopoly money pipe dream over here to actually working for you, growing for you, and doing all of the things that will help you actually become financially free and build wealth. So if you're interested in that, again, annual review, please comment below. Would love to talk to you. If you are not in the Colorado market, we can work something out, general idea, but the point is how we're going to use that smartly and invest that. My job as a real estate agent is to advise people and become that financial advisor when it relates to your real estate assets. I would be willing to bet that your real estate asset is worth more than your stock asset, unless you're, diligently putting money in there since the time you were 18. Real estate has had quite the last few years. So if you're a homeowner, you're great. With all this said, if you're listening to this and being like, I'm a renter, I don't have equity, it's super expensive, prices are high, interest rates are high, I'm gonna tell you right now, the time's to buy, because you have opportunity to get in. And because of that 6% or whatever we've lost from the top of this market, you have a little more opportunity. Sellers are paying concessions, all of that stuff. So if that's you, we can talk too. Would love to help any of you realize all of that information and realize your monopoly money and make it into real cash money. So as always, Jeremy Kane, please like, comment, subscribe. So excited to help people understand and work through this shifting market. And I just want you to know it's all going to be okay. The real estate market's going to be okay. So look forward to seeing you on another video. But as always, if you want to reach out, please do. Would love to chat with you. Have a good one.